I was right. This is the most important thing you can learn to not be a traditional retail investor and get screwed by the big guys. Welcome back to the channel, everybody. My name's Artie with CoinCasso, and this is Bitcoin Today, a show where we discuss everything cryptocurrency to keep you guys up to date and informed on all things happening in the crypto industry. In today's episode, stocks tick downwards, as does Bitcoin down to 9,200. Next up, a significant Ethereum rally signals new altcoin season, and why a monetary historian believes Libra will never see the light of day. We also go into an in-depth analysis on Bitcoin to show you exactly why it just took a dump. And as always, we quickly cover the current top cryptocurrency prices. Good morning, everybody. It is Friday, July 10th. Thank you so much for joining me every single day. I really appreciate all of you that come back and watch this show every day. And if you're new here and you like what you see in this video, consider subscribing down below and ticking the notification bell to get notified every time we upload a new video. I got a little tickle. And as always, the show is sponsored by the CoinCasso cryptocurrency exchange. So if you're looking for a place to buy, sell, and trade cryptocurrencies, check out CoinCasso and sign up for a free account in the link in the description below. Let's jump into these prices. Bitcoin currently sitting at 9,164, down 2.5% from yesterday. Ethereum down 3% at $238.12. EOS down 1.6% at $2.61. Litecoin down 2.8% at $43.82. I'm completely thinking about removing Litecoin altogether. Thoughts? XRP down 2.32% at 0.197379. And Cardano down 2.26% at 0.120213. Let's check out the volume in the last 24 hours of these cryptocurrencies. Bitcoin 17.7 billion, Ethereum 8.2 billion, XRP 1.5 billion, Cardano 522 million, and Litecoin 2 billion. If you are a day trader in cryptocurrency and you watched yesterday's video, hopefully I saved you a lot of money, or I made you a lot of money by you having the opportunity to go short on Bitcoin. When I made yesterday's video, Bitcoin was sitting at $9,350. It is currently sitting at $9,160. That's a drop of 2.5%, and I called it 100% because I've seen this trend pattern before. Now let's jump into TradingView and see exactly what happened. Now I know I went over this yesterday, but I want to clarify just one more time for the people that are new here and have not seen yesterday's video. So over the July 4th holiday, we saw a lot of flat stagnation. The price shot up, went down, and then went all the way up to 9,475 and subsequently dropped immediately back down. This movement right here is 100% textbook bank and market maker manipulation. Let me explain. This is the most important thing you can learn to not be a traditional retail investor and get screwed by the big guys. This right here is what we call a consolidation period. This is what people perceive that the high and the low of the range will be. Breakout traders believe that if the price goes above this level, it should go to the moon. Same on the downside. If it breaks below this level, people think that the price will continue to go downwards. So the market makers did exactly what you think it's going to do and then reverse it on you. They cause the price to go up, making a lot of people take the long position, correct? Then they intentionally flood the market with a bunch of short orders, causing the price to go down, locking in all of these people. These people that invested in long positions usually have their stop loss at the bottom of the range. So the market maker keeps pushing the price down, knocking out everybody's stop losses. Then those same people believe that the price is going to dramatically go down. So they put in short orders. The bank reverses it again, locking up all of these people and pushing the price up. People see this reversal as, oh, this is an opportunity. This is market manipulation. I'm going to take the long position. Too soon, Junior. The market maker sees this as always and does a double push to screw over as many people as humanly possible. He pushes the price down even further, knocking out all these long stop losses with this huge candlestick. Now, like I mentioned before, this is the a-hole move. This is the one that just kills everybody. The market maker does this for two reasons: to make people believe it's a double reversal, causing more people to go short, and making sure that they've locked these people. They've locked these people. They've locked these people. And this is just the nail in the coffin. This drop lower than the previous lowest low makes the market maker satisfied, saying, hey, I've screwed over enough people. Now, believe it or not, a lot of people trade without a stop loss. They do this because they're 100% certain the price will go up, and even if it doesn't, it should correct back down so they can take their money back and walk away and lick their wounds. The market maker will not allow this. Now, if you remember yesterday's video, I talked about 3-day push upwards. Why does the market maker want to do it for 3 days? Imagine if you put a short order here expecting the price to go down, and then over the next 3 days, it starts climbing up, getting further and further and further away from your entry point. This 3-day period will psychologically break somebody if they're watching their account go down, down, and down. In 3 days, they're so exhausted and mentally frustrated that they lost so much money that they intentionally close the positions, not wanting to be hurt anymore. Market makers and big financial institutions know this. They know the psychology of the retail trader. They know that after 3 days of consistent losses, they'll just say, screw it, I'm out, I made a mistake. At that point, they do a double top. Now, what's a double top? It flattens back up, making everybody believe that that was the top of the range, causing people to go short. The price goes down, market maker pushes it back up one more time to screw over all those people, hitting all of their stop losses. Sometimes they do a triple top like they did right here. They push the price even further down, causing people to go short, break their stop losses, and once they're satisfied that they've screwed over enough people, they sell off like crazy, causing the price to tank down. We get a little consolidation in the range, giving people some hope. Then the market maker tanks it again. Now, don't think that this is the bottom just yet. The market maker is one of those bullies that kicks people while they're on the ground. Numerous times. Usually what we see is a spike up and drop back down. Little bit of a consolidation, spike up, and another drop back down. You have to think about how much of an a-hole the market maker is. Remember these people that got stuck here with no stop losses and they're sitting there scratching their heads wondering if the price will ever get back to it? The market maker is not a nice person, and he will cause the price to drop back down even more, causing more anguish and more pain to more people, but still not releasing the people from the previous lowest low, and he'll usually sit right about here just to piss people off. I called this yesterday. If you took the trade, good on you. I had a lot of friends email me and say, thank you saved me a lot of money. And their follow-up question was, where should I get back in? We're looking at that $9,000 level right now with what I'm seeing on this chart. Again, I am not a financial advisor. I don't know everything. I'm not Nostradamus. I can't predict the future. Nobody can. But looking at the history, looking at this exact pattern over time, this has happened hundreds and hundreds and hundreds of times in Bitcoin, in Ethereum, in Forex especially, because these market makers do this on a daily and weekly basis. Think about business. You have something to sell. You need buyers, correct? Retail traders are the buyers when they see an uptrend. So guess what the businessman does? He sells. You have a buyer and a seller. One person always loses their money. Now you're asking what's going to happen after it hits 9,000? If this cycle continues with this market maker, this is exactly what we're going to see. We're going to see this price drop down maybe just below 9,000. I'm thinking maybe 89.50, 89.60, or it could be between this low and this low. So what are we sitting at here? 89.20 to 89.30. Because the retail trader is trained to look at the lowest lows and then go short, they're going to see this point and wait for a bunch of sell orders to come in afterwards, then bring the price back up because they're a-holes. So just to be on the safe side, we're looking at 89.30 right now. Now, don't think that you can get the bottom. It's absolutely impossible. Market makers do this. It's quick. It's 15 minutes. It's 5 minutes. You'll miss it unless you have like notifications up and you want to pull your app up and make the trade. It's impossible. You have to do it preemptively and or set a price that you like, and hopefully it'll automatically execute if the market maker doesn't move past it too fast, because you have to realize you're not a priority. The market maker is to the exchange. Dude, if you guys are getting some value out of this, please subscribe to the YouTube channel. Leave a like on this video. This is super valuable information, and it's like, I want you guys to succeed. I want you to make money. I want you to see these ridiculous patterns that the market makers make and not get stuck like all of these fools in these highs and lows. Okay, continuing back into it. This cycle repeats. It's a rinse and repeat over and over and over again. We'll hit this low, we'll hit a long stagnation period and a nice consolidation just like we did right here, where everybody gets bored and nobody knows what's going on. Then the market maker will do the exact same move. So this is exactly what you're looking for. You're looking for the consolidation period, the fake out, the drop back down. You're looking for a W. This means the market maker is screwing people over twice. On the second leg, this is the first leg, this is the second leg. On the second leg, you will take the position long. This period usually lasts 3 days. Then you are going to look for a consolidation, also known as an M formation. Boom, first leg. Boom, second leg. Once that second leg happens, you take the position short and ride it all the way down here. Also keeping in mind this lowest low and this lowest low. The market maker does not want to give the money back to these people, so at this point, he's going to start consolidating all over again. During this consolidation period, just as he did here, he's exhausting people, giving them a perceived high and low of the market, that this is the high, this is the low. And then he does the complete opposite of what everybody thinks during a breakout session. These are breakout traders trying to go long. He screws them over. These are breakout people trying to go short. He screws them over twice. This is absolutely standard stuff, but very few people know this because everybody's listening to gurus on YouTube saying trend reversals and trend lines and, it's math and statistics. It's not math and statistics. It's trillionaires and billionaires manipulating the market, taking everybody's money. How do you think they're trillionaires and billionaires? And they don't have too many tricks up their sleeve. This is their bread and butter, and it works every single time. Okay, listen, I'm a random guy on YouTube. I watch these charts day in and day out. I've learned a lot of information and I've seen this trend over and over and over again. But what I want you to do is look at this. Take a screenshot of this. Look for the consolidation, spike up, double drop back down, long pull back up, M formation, and short. This pattern right here, take a screenshot of this and look for this in every single currency. Bitcoin, Ethereum, GBP USD, everything. Look at this and try to find it in the past. You will see this millions and millions and millions of times during the day, during the week, during the month. It's even in gold if you look at it at a long picture. You have to blow it out to weekly candlesticks to see this pattern. But this pattern is the market maker's bread and butter. Do your own research. Learn your own technical analysis. I'm just giving you a bit of information to lead you in the right direction to not be a traditional retail trader. Again, I am not a financial advisor, so please don't sue me if you lose a bunch of money. I'm just giving you information. Make all your own trades at your own risk. Every single investment in trading is not guaranteed. Only trade money that you're 100% willing to lose. Do not bet your mortgage. Do not bet your last paycheck. Do not put yourself in a position where you cannot feed your family. That is completely irresponsible. When trading, only risk 1 to 2% of your entire account. Don't see something like this and say, okay, I'm going to dump my entire account because this is a sure thing. It's never a sure thing. The market maker is always out to screw you over. Now, I took a bunch of time on that technical analysis, so let's just read the headlines of these articles that I wanted to cover today because they're really not that important. You got everything you needed from my technical analysis. First up, market wrap, stocks tick downwards, so does Bitcoin to 9,200. This article literally goes through everything I just talked about and how the market is tanking because of these market makers. The market does the exact same thing as Forex. It does the exact same thing as cryptocurrency. Seriously, these are just market makers doing their thing. I've got the article linked down below if you want to give it a read. Next up, a significant Ethereum rally signals new altcoin season. This article was written right before the price dropped back down like I said it was going to, so this article is now null and void, but you can read it because they have some pretty decent technical analysis in here that a little bit goes against the trend of a traditional trader. I'm very bullish on Ethereum because it's actually made more percent gains than Bitcoin. So a lot of my money moved from Bitcoin to Ethereum recently. But when I see big market moves like this, I have to day trade it because I see what the market maker's doing. And if you're not familiar, Facebook actually has their own cryptocurrency plan called Libra, but a monetary historian says Libra will never see the light of day. They tried to make this article way too intricate. There's a lot of big words. It's kind of dumb, but basically what they're saying is that Libra is going to need a central bank. to function. This last quote sums it up perfectly. So there are some very big uncertainties, I think, that would have to be resolved in order for the creation to get off the ground. And my conclusion remains that some of those problems are insoluble. The theory behind Libra, it kind of works, but it's also got some fundamentals that just don't. And this article completely lays them out. Everything is linked down below. Thank you so much for joining me today. Don't forget to leave a like on your way out and subscribe if you haven't already. And it is Friday, so you guys have an amazing weekend, and I will see you back here on Monday.